Well, I'll put an overlay here.
All right, good deal. Anyone who's on the group, who's in the chat right now, let's put up something. We're going live in about 1 minute.
Nobody yet. We don't have anybody yet.
Perfect.
We should have went live a little bit earlier, like about a few minutes earlier. Next time we'll do that.
Yeah.
We'll wait a couple minutes before get some people filter in. Maybe we'll start in like 7.
Yeah, let's give it a couple minutes actually.
Yeah.
Right.
We can still keep talking though, man. So
yeah. So what I'm saying is BlackRock, KKR, these guys are just waiting for the rates to stabilize and for the market to stabilize. And when it does, they have all that money sitting in the institution funds that they need to deploy. And once then that happens, you know what's going to happen, right? That inflation is going to be like twice. And we're going to see that cap rates is going to come down even more because now everything will come in. And these guys are really hitting it hard on multifamily as well as single family homes.
Yeah, so those are the two. They're even investing in single family, but they're buying like.
So we have this little window, like right now, Q1, Q2, that would be the small window of opportunity where everything's going to come on sale. And then after that, boom, it's going to go back up. So, all right, 6 o'clock.
I'd say let's give it another 2 minutes here. We'll get started in 120 seconds. How about that? Give it another 2 minutes here. We'll get started at 120. I hear an echo. Do you?
Yeah, I hear an echo.
Why is there an echo? How about now?
Do you hear an echo now?
No.
Okay, cool.
That's okay?
Yep.
Yeah.
That's perfect.
All right, good.
It's a sound effect mixer, man.
Yeah. All right, I got to take this overlay off, man. So let's get it going then, isn't it? All right, here we go. Facebook Live, YouTube Live. We're back with the team. All right, so it's going to be a good one. It's going to be a short one, but a good one. Do you ever lay awake and seriously think about if you have enough money to retire? I mean, how much money do you actually need? How much is enough? We're living longer, and inflation is eroding our savings and fixed equities. The 401k plan's gone nowhere. Do you spend enough time with your children? Do you wish that you could spend more time with an aging parent or a grandparent? How about just take 3 months off just to take care of yourself for a change? If you answer yes to even one of these questions, then you're in the right place. Because for me, my life changed once I learned about this thing, passive investing. I was an active investor. And once I learned about passive investing in real estate, my life literally changed for the better. You know, I'm no longer dependent on a dental income, which gives me a lot of freedom, a lot of, flexibility to do as I please. I spend enormous amounts of time with my children. And that's why Noel and Tom, we had this group. We created this group. We believe strongly in fundamentally strong investing. If you invest properly, you can develop multiple streams of income that can literally replace your dependence on active income. And that's the only way to true freedom. That's the only way. So specific, I'm Dr. Jonny Walker, or Jonathan Withanachchi. I'm the founder and principal of Walk of Wealth. We're an investment firm that I created in 2019. Walk of Wealth, alongside its valued partners, we've gone on to invest in 690 apartments valued at over $94 million. And our mission is to make 1,000 people financially free. This is a similar goals of Tom and Noel here. I founded this firm to not only is to help teach people about the things that we just don't learn in our professional programs. So today, I'm going to put up the link to where you can find my website and find me on all the social medias and all that. I'll put that in the comments. Next, I'd like to introduce my esteemed co-hosts, serial entrepreneurs, very successful in their own right. We're also partners as well, just recently. So first, I'd like to introduce Dr. Noel Liu. And Dr. Noel Liu, please tell us a little bit about yourself and how you got started in multifamily real estate.
Awesome. Thanks, Johnny. That was great intro, man. That's great question, and that's a great stuff that you brought up. So my name is Noel Liu here. I am a general dentist. I'm based in Peoria, Illinois. I know Illinois is pretty cold out here right now. So I'm a general dentist. My wife's a general dentist. We own a group of practices where we are just like, day in, day out, we're practicing as well as management of our business, as well as our doctors, our team. So that is where my main thing is. And, I got started with multifamily, which I started as a side gig. And I started about 1.5 years ago. So it's almost approaching 2 years now, believe it or not. I mean, time's flying. So I started about 1.5 years, 2 years ago in multifamily. I started with passive investment. I started with limited partners, being limited partners in a few deals. And that's what I concentrated solely on, making sure my main thing was my main thing, and doing this passively so that I can have like a side vehicle that is running parallel with our main business. Now, of course, since it's only 1.5 years, it's not going to be as it's not going to replace my current income, but at least I got something initiated. And that is one of those things where we created this group. We wanted to make sure, like, because I'm so passionate about it, and I want to make sure like everybody understands, and especially our colleagues, our physicians, friends, our dental friends, we all understand like there is another vehicle side, on the side besides stock market and besides any of those other stuff that's out there. So passive investment for me had been huge. Started about 2 years ago. I've been getting like, good tax benefits. I've been getting like instant, constant cash flow coming in. And this is not even talking about what's going to happen at the end on the other side. So it's going pretty well. And right now, currently, Johnny, Tom, and I, we are involved in one deal that we are partners, and it's going great. And then also I'm in a general partner in another deal, and that is also going great. So for me, multifamily has really taken off, and I really, really feel passionate about it. And I would like to like share all my ideas, everything that I've learned, share with you guys. So with that being said, I would like to pass it on to Tom.
Tom, please.
Hey, that was great, Noel. So, hey guys, my name is Tom Baby Varghese. I am an entrepreneur. I've owned a couple of businesses, and I started investing. So I met Noel a couple of years ago, I think 1.5 years ago, at one of those investor conferences. So my journey this is something I was thinking about. Today I was on the way back from office. I was thinking for some reason, why did I get into multifamily, right? And I was going back and thinking, so I had a conversation one day with my accountant. So I'm sitting with my accountant, tax time. He's like, hey, man, you're paying all these taxes. I got a solution for you. What you got to do is you got to invest in real estate. So he's already got like 30 buildings and all that stuff. So he said, man, let me show you the depreciation benefits. Let me show you the cash flow benefits. So basically, he got me into it. And he got me, but he was not sophisticated. He just knew how to buy smaller units and all that, right? So he said, man, I'll get you a 6-unit building. I'll find it. I said, I have no idea. You do it. I'll put the money. And so that's how I started. So I bought the 6-unit building. And I saw the cash flow. I saw the opportunity. I made some mistakes and all that, which we can talk about another day. But I saw the opportunity here. I was like, man, I can save money on taxes. I can make money. It's like a mini ATM coming in every month. And you're building for 3 years down the line, the equity builds up and all you do is wait, right? And I've been thinking about like expanding, but I was still thinking small, right? So that's when I went to this mastermind, the conference, and then I ended up joining the mastermind, and that's where I met Noel. So, and after I joined, this was about 2.5 years ago. I started the journey about 2.5 years ago, probably the real estate journey. I knew nothing about it, which probably many of you are today, and you don't have to worry if you don't know anything, because I knew nothing. I mean, I was like, okay, I'll buy a single family home as an investment, buy another one, buy it with cash. I was just thinking about these stupid things, right? I was like, man, I have these cash saved up. I'm going to go and buy my neighbor's house when it's on sale and rent it. How stupid was that? Like, I mean, I seriously thought about that. So then I went to these conferences. I met him. Then I heard about multifamily investing, passive investing, and I actually want to show you something. I got a distribution today, a small from the small buildings that I invested in Houston, which we are going to, by the way, do the meetup and walk the. Remember, guys, we're going to do it on December 10th in Houston, and we
11th,
are
11th.
11th, right? Yeah, and then we are going to show that building and all that. So I was looking, if you can see, let me see. I think it's too small to see, but anyway,
I see it's reflecting.
yeah, it's
Yeah,
reflecting.
yeah.
But I got two distributions. One is $382. One is $264 for different buildings. And you know what? I haven't even seen one of them. I know one of them, but I don't know any problems going on there. None of that stuff. Whereas the 6 unit I own, that's been a headache managing it, managing the tenants,
Mhm.
evicting people,
Management.
big headache. I mean, second job. Think about it. I want to get rid of it
Mhm.
as soon as my loan is due. I'm out. So this passive, man, all I do is check the accounts. I get emails saying this is how your property is performing, and this, like Noel was saying, this is not even counting what we are going to make in 3 years when the building is refinanced or up for sale, right? So that's my journey, and now I'm so excited that Noel, Jonny, and myself, we are in deals together. We are doing deals together. I am right now in about 700, I think close to 700 units as a GP. I also invest in storage units and stuff like that, so that adds up the units pretty fast. We just closed a 280 unit a month ago. So, and about close to or a little,
Hey, I think that deserves it. That deserves it.
yeah, a
Yeah.
little bit over 1,000 units as LP, limited partner, and I like that because there is nothing I have to do. Money keeps coming in, and the tax benefits, guys, that alone will save you a ton of money rather than paying the tax, man. So that's my journey, and so
Thank
excited
you.
to be here today, and this is going to be a great session, guys. So,
Thank
yeah,
you. Thank you. Thank you,
well,
Tom. All right. So, specific topic today, we're going to talk about now. A lot of people are scared to invest in this environment. Why shouldn't you be? We're countries in a recession. We are where capital markets are in flux. We have interest rates that are going up, and we have more increases to come. Inflation is still not curbed. We have inflation, and we have to look at it not just in America, but globally. Europe is getting crushed by inflation. We've pumped $13 trillion into the world economy in an 18-month period. So, of course, and so we have a lot of headwinds. There's geopolitical issues. All right. We have Russia invading Ukraine, and America spending money and all of these resources. We have China saber rattling in Taiwan. All of these things lead to uncertainty. Stock market is down. Single family housing markets, which were riding extreme highs just a few months ago, are starting to crack. Prices are coming down. Cryptocurrency is less than half of what it was just 10 months ago. $2 trillion, million crypto millionaires are working at McDonald's. So why the hell is this the time to invest? Shouldn't we be kind of worried about it? And these are some of the concerns and some of the things that hold people back from investing. So that's what we're going to talk about today. We're going to talk about this market uncertainty. And is this a time to step back? Is this a time to just, hey, let's hold on. Let's wait to see what happens. Let's wait until interest rates settle down, until the market settles down. Comments on that. Noel, what do you think? Is this a bad time to invest? I mean, are you investing right now? I mean, obviously you are. Why?
Absolutely.
Are you insane, or why are you investing?
That's a great question, because here's the thing with multifamily. It's an investment for all seasons. And the reason I say it for all season, it could be winter, it could be summer, it could be spring, fall, whatever it is, right? So right now we may not be at the best time, but right now it's the best time still. The rates are going up. However, nobody's talking about the multifamily or even the residential homes. The price is coming down. Nobody's talking about that part. There's a lot of things. There's a lot of great things. There's a lot of great deals out there that can offset some of those rate hikes. then there are rate cap locks that we can put in place. There's a whole bunch of, like things that we can do. We can even underwrite them according to what the rates are. Now we got to keep one thing in mind: the rates are not going to keep going up again and again, like over and over again. I mean, it's going up. Like right now, they are trying to control the inflation. It did go down compared to July. However, like right now, we're looking at it. Maybe about another this month in December, they might go up again. January, February, we're expecting it to go up again. But when we are locking in our deals, we are locking in about 3 to 5 years. And we know for a fact in 3 to 5 years, it's not going to keep going up forever. Otherwise, the feds are going to have a hard time meeting their own debt service. So with that being said, I would say right now is a great time. The real estate market is down. You pick up the deals right now before the rates stabilize and all the big boys, they start jumping in. And now then you see inflation going on, beyond imagination. So get in now, get in a deal. We still have this window of opportunity. In 3 to 5 years, whatever the rates are, we can always go back and refi or sell at a much, much higher or much, much higher value or a much lower cap rate.
So you're talking about tactics here, right? So let's talk a little bit about that. So what Noel's talking about is interest rates, which is probably the biggest headwinds in multifamily real estate. And I really like the fact that you hit the head bang on. There's never there's never a bad time to invest in real estate if you are investing with the right fundamentals. I mean, people like, oh, well, I'm going to wait for the market. I'm going to wait for it to stop going up. I'm going to wait to stay going down. The truth is, if you have the right fundamentals, you can invest in all seasons. You can invest in all phases of the economic cycle. So that's great. I'm glad you brought that up. And the biggest headwind right now for investing, period, is high interest rates. Right. So interest rates have gone from 0.3 to 2.75, the Fed rate. So mortgage rates are starting to get to in the mid sixes. We expect a couple more interest rate hikes, smaller interest rate hikes, maybe in Q1, or maybe another 0.25, maybe another 0.5. So what that means, all right, so we're going to get to maybe 7%, 7.25, something like that. Now, if you look at the 50-year average, when I was a young man, and I just graduated from interest rates for commercial loans was 10%, 9%. So that back then it was, and people were still doing deals. People were still making money hand over fist. So those cap rates have come down. I'm going to hold off on cap rates for a second. So the interest rate, they're really not that high when you look at a historical average. They're right in the middle. They're right at average. So people say, oh, interest rates are so high. Yes, they are high relative to 6 months ago, but they're not overall it was not 18% back like in 1981 with Paul Volcker came in and tried to curb inflation in the late 70s. And that's never going to happen here because our debt service is way too high. Right? Like as Noel alluded to. So now if we know what these interest rates are, but we can buy at and finance properties that can still cash flow with these interest rates, which means we have to buy at the right price, you can still get cash flows and hedge returns. Tom, care to comment on that?
Yeah, so that's a great point, man. Like, always remember Warren Buffett's quote, right? He said, be fearful when others are greedy and be greedy when others are fearful. What's going on right now? Everybody's on the sidelines. All the big guys, the big banks, Goldman Sachs, everybody is sitting on a bunch of cash.
Lenders dried up. Yep.
Yeah, nobody's making any moves. So what's happening with the hedge funds and all these is like they're having redemptions where people who put the money in, they're saying, hey, I want my money back. Because my money in my stock market portfolio and crypto has taken a nosedive and I'm going to hold on to. So they're having people asking the money back. So they're not doing anything right now. So right now is a great time for us as real estate investors, right? For the small guys to go and make a play. That's our time. Is there an echo, guys, by the way?
Yeah, there is a little bit.
Yeah. So So yeah, it's our time to go in and make that move right now, like Jonny was saying. So here's something some of you may not understand is that we are not buying these with full cash. We need the bank. Bank is our partner. The debt is going to be our partner in these deals. So we need the debt to be at a reasonable level so we can go in and buy these properties. Right now, when the debt is low, here's what happens. When the debt is low, which is what like 6 months ago was, like 3%, 2%, 4%, and all that, then everybody wants to be in the game. And guess what happens when there is too many people trying to buy properties? Price goes up, right? And now you're muted, Jonny. Jonny, you're muted.
Yeah, that's
So
right. Then plus the country, we printed a bunch of money, so everybody's flush with liquidity. Everybody's
exactly.
looking to spend it. Cap rates are low, right? Interest rates are low, like so. It's prices
And
go
then
up.
it
Value.
just go up, and then
Yeah.
it blew up. I mean, like inflation. And now they're trying to bring it down. So they're going to increase the interest rates. And guess what happens? When the interest rate goes up, people don't want to buy. And as a result, the property prices will fall. So the $10 million
Puts
property,
downward pressure on prices.
yeah, we may get it for 7 million. And we may buy it at a higher interest rate. But guess what? Like Jonny and Noel was saying, it's not going to stay the same forever because the economy will go to the dumps. I mean, it'll be done if they keep that interest rate high.
It'll topple into country will topple into a depression for
Yeah.
sure if you keep it. Yeah.
So they're going to lower it at some point, and when they lower it, we refinance it or sell it at that price when it goes up and make a bunch of money. That's the game with real estate, guys. And one more thing I want to say is that at real estate, there's never a bad time to buy. It's a matter of time. It's a matter of waiting, how long you'll have to wait, basically, right? So if you, let's say for whatever reason, you purchased at the wrong time, all you have to do is maybe add a couple of years of waiting period to that,
And
as
still
opposed
still cash flow.
Still cash
If worst case scenarios, you're still cash flowing. If you are in the right deals, right? Because
right,
there's still,
which cannot be said with stocks. You can buy the wrong stock. You can wait a lifetime, and that ain't coming back if it went down. So I know a lot of stories from the .com time, which the stocks went down,
the .com bust. Yeah.
they never came back up. So that's the cool thing about real estate, guys.
So Tom, you're saying prices are starting to come down a little bit, right? Like so.
Absolutely, yeah.
And that's actually true. I mean, we're doing it. We're doing a deal right now. It's a 180 unit property, right? I mean, this property we've negotiated $1 million reduction in the price. Because we went back to the seller and retraded. Like, hey, this is with the current interest rate that we are getting, we have to lower the purchase price by $1 million.
Yep.
Now that $1 million is going to be realized as gains on the back end when things come back.
Yep.
And then on top of that, because we've got it at $1 million less, that means our payment is $1 million of mortgage less, which means a little bit higher cash flow for the entire thing. Plus it's leveraged and we're building equity. So that million actually turns into multiples, at least the 1.5 on that $1 million reduction. So the prices are starting to come down. So now we can go in and we have less competition, right? There's less people competing to buy because there's less lenders, there's less everything. So
here's one thing we didn't touch on. So that I think we should bring it up right now is one thing that's happening today that's different from all the time is that the pressure on rents going up today is just going up. It's not going to come down because people are unable to afford buying homes and the home prices have shot up to a level they're not going to be able to afford buying homes, and the rents are just climbing. So
rents are continuing to go up even in a recession. If you are in a market, because me and Tom and Noah were talking about this earlier, even during a recession, there's places where people are moving away from. Companies are closing, factories are closing, people are leaving those certain cities, and they're moving to cities that have jobs. Now you have
Caterpillar left Peoria, Illinois, where Dr. Noel Liu is, right?
Yeah, there's bad mass drainage of people. So now if you position yourself that now there's cities that are declining or there's cities that are stagnant, populations are not changing. And then there's places in the country that populations are growing and going up. So now when you have people moving, competing for a scarce resource like affordable housing, we don't mess with Class A luxury stuff. That's not what we do. We're in Class B and Class C properties where there's a recession resilient component built in. Now, you buy a property that's undervalued, it's getting below market rents, whatever that rent is in that city. Say it's $1,000 a month. This apartment building, you can get $1,000 a month, but it's only getting $700 because it has been neglected for many years. The units haven't been renovated, the exterior needs to be spruced up, the basketball court needs to be redone, etc. We come in and make all these improvements. Now we can take the rent from $700, but say in that city, the going rent for a renovated unit is $1,000. Now we can raise the rent to what the market is. We don't depend on the rent to go up even. As long as we have that built in, we control the profits. It doesn't matter what's happening at the national level, economy level, recession, doesn't matter, because real estate is a local business. And we're dealing with human shelter, which is inelastic demand. So now all of a sudden we have units that people are competing for, more people are moving here, and we can push the rents to market. The profits are built in. And that's why multifamily real estate is a recession resilient play. It's a play that hedges against inflation. All the problems we were talking about today, multifamily is a great answer to those things. And that's why we're investing in these things. And you can invest for cash flow. Yes, you can get cash flow through a recession. Absolutely. We're doing it, multiple deals, and this is not brain science. This is just investing in places for people to live and providing places for people to live with dignity, live with pride. Noel, do you have any final thoughts about this? Let's kind of wrap this up. Let's we want to keep it short this week.
One thing is these guys, a lot of people are thinking if it's a good time to invest. I think they got a valid point. I just want to say is not all real estate are created equal. And when we say that is, some of those multifamily that we're looking at, it all have its own little niche going on. So even in those migrating states there, you still have pockets. We still have like areas where you don't want to invest in. You still have areas where it's really, really hot. Like in Illinois right now in Peoria, there's still like some pockets there, which is really hot. And some pockets, majority of them are pretty cold. So with that being said, I think there's a little grain of salt in there that, when we say about like all multifamily, I don't think it's all, but if we are in the right market, the right zip code, the right neighborhood,
100%.
right? So, and that's why when we look at deals, we have to go through so many deals, we scout through so many, and we have to find the right partners, the right area, the right zip, even down to the street level. So that is really, really important, that what's going on. So I can understand a lot of people why they have that, why they're holding back, because they don't know much about it. So which is why in our group here, we are here to share everything from our mastermind groups to find out, from the experts, what's going on and where the market is heading. So all this information that we are providing here, it's not just like made up. It's like actually coming from the big boys, and we are just providing it to you guys. And that's what I feel like everyone should be like, understanding like every market is different.
This is like a quick digest of several masterminds that we are part of and that we're just sharing with you. That's a great point you said there, right?
Yeah, absolutely. And one thing of optimism here, right? Now, in recessions, a lot of people lose a little bit of money, but a few people make a lot of money. Right? And position yourself, position your family to be in that, to do that. And this is also a thing of optimism. When we had the stimulus package in 2008, $781 billion, which was unheard of at the time. Now we can laugh at that, right? 781 billion is nothing. 781 billion. We led to 10 years of boom and prosperity in this country. We've had rising prices between 2012 to 2022. Now we're having this correction happen again. But remember, $7 trillion was printed. 40% of all US dollars was printed in an 18-month period between 2021 and 2020, or 2020 and 2021. $7 trillion. This has yet to work its way into the economy to a street level. We are headed for a big boom time. If history is, if these stimulus package, the whole government's taking the money back. No, the government's not taking the money back. They're only quantitative tightening. They're just decreasing the amount of bonds they're buying. Oh, we're only going to buy 120 billion, and then we're going to reduce it 100 billion to 80 billion to 40, and then we're going to taper off. That's different from taking money out of the money supply. No, we have $7 trillion that will go through the economy. And if you position yourself, you buy in the right places, you invest in the right place from now, we're headed for times of great prosperity. I mean, until the dollar fails, this fiat currency, they keep printing and debasing the value of the dollar. But while it's still a currency, we get as much of it as we can.
Oh, see,
let me correct that. When you have your money in real estate, it doesn't matter.
Yeah.
It doesn't matter if you debase the currency, because guess what? When we're going to go sell this real estate, we're going to go sell it for whatever they're trading for at that time. If it's herds of cattle, if it's gold, if it's whatever we got to trade
that's
for.
What I was going to say. You got to take your paper and convert it into buildings, guys.
Yeah, that paper is cash is trash.
That's what you got to do. Put it in real assets. And also very, very important point that we should have brought up from the beginning that Noel and Jonny just said, recessions are the opportunity of a lifetime to make money. I don't know if we will have this kind of opportunity in our lifetime. So position yourself to invest in some of these buildings and properties, because this is going to go up like crazy, and you're going to make a ton of money if you position yourself properly in this.
That's good.
Guys, I've been told that there are good times, there are great times in real estate, and somebody was telling me the other day this is super great time.
I mean, I think there's always a great time. Real estate, there's always a great time to buy. It's an inefficient marketplace. You can go, there's insider trading. You can know about things about properties that nobody else knows about, and you can go and buy. There's always desperate sellers. There's always distressed sellers. If you just, and all you have to do is alter your tactics and strategies for the times. We keep our mission the same, but
absolutely,
we just have to pivot with the moves of the marketplace. So here the capital markets are in flux. We pivot. We look for good debt products where we can make sure we cash flow, and we have lots of runway. So, hey, we got some time to sit on this in worst case scenario and still get cash in our pocket every month, right? Yep. We buy things like rate caps so that interest rates can only go up so much. I mean, rate caps are probably becoming useless at this point, right? So now that interest rates are probably not going to keep going up that high, that fast. But I think this is great here. I think that thank you guys so much for joining us. I think this is a good place to land the plane. We're going to be live every Tuesday. We're going to, we're instead of every other Tuesday, we've made the commitment. We're going to do this every Tuesday. Instead of every other Tuesday, we're going to do it every single Tuesday. We want this group to be the biggest, best group for passive investing, for dentists, for doctors. And we want this to be a place that people can come here for information, to network, to find opportunities, to do all of those things.
Awesome. All
right, guys. So
that was a great time.
Great session.
Right. Yeah, absolutely.
For joining us. And if you were live and you caught this, you're lucky, because it's going to be removed from the live, and you will only be able to get the live. All right, guys.
All right, guys.
Thank you.
Have a good